Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Corporate strategy is mostly explaining why last year's mistakes now count as long-term investments. Corporate emails would be shorter if people were allowed to say what they actually mean. Tech is solving problems we didn't know we had while ignoring the ones we definitely do. Political debates are where logic takes a short vacation. Every company wants agility, right up until agility costs money.
This chart may as well be titled The Real Election Results. Across Karnataka, Chhattisgarh, Rajasthan, MP, Orissa and Maharashtra, fiscal deficits widened right after elections, almost like a hangover bill arriving the morning after the party. Pre-election year promises, election year spending, and post-election year accountants crying softly in the corner. Some states see deficits jump by 1 to 2% of GSDP, which is no small change. That's money that could fund highways, schools, or at least fewer freebies. When you stack today's Nasdaq 100 against history's greatest bubbles, the comparison is almost flattering. The Great Depression, Japan's 1980s mania, .com, Gold 79, China 07, those charts went full rocket launch and full crash landing. The Nasdaq today is climbed sharply since October 2022, yes, but compared to these legendary blow-ups, it still looks more like a hot air balloon than a zeppelin of doom. The message: tech is frothy but not frenzied, enthusiastic, not euphoric. But bubbles are like popcorn. They don't announce which kernel pops next. This chart from The Economist is a clean snapshot of India's biggest development truth: that states aren't moving at the same speed or even in the same direction. Between 2005 and 2020, southern and western stars like Tamil Nadu and Gujarat sprinted rightward, that is higher GDP per person, and then downward, lower poverty. They are the textbook case of growth translating into rising living standards. Meanwhile, states like Uttar Pradesh and Bihar have improved, yes, but on a far shallower slope. The top 10 billionaire families now control 8% of India's entire listed market cap, which is both impressive and slightly terrifying. Ambani and Adani alone are financial skyscrapers, with the next 8 forming a very exclusive neighborhood of wealth. Everyone else, well, we are basically tenants in their market. What's striking is how concentrated India's corporate power really is. As one joke goes, there are two kinds of people in the market: billionaires and the people who read about them. India's investor funnel is basically a comedy sketch in chart form. Start with 146 crore people. Shrink it down to 68 crore PAN holders. Cut to 50 crore UPI users. And then dramatically collapse to just 4.8 crore stock market investors. That's barely 3% of the country. For a nation that loves returns, we sure take our time showing up to the market. India's crude import mix is shifting again, and the headline is hard to miss. Russian oil, once the bargain barrel backbone of India's refinery economics, has taken a sudden hit after Reliance stopped importing Russian crude into its Jamnagar SEC refinery from November 20th. The numbers tell the story. Russia 1.86 million barrels per day in October to 0.98 million barrels per day till November 20. Iraq slightly up, proving oil suppliers never really leave. Saudi Arabia softening. UAE and the US stable but small players in India's barrel buffet. India's data center rush is turning into a full-blown gold rush. And the pie chart shows why. A 54% hyperscale demand share means that the country isn't just watching Netflix, it's building the digital backbone of the next decade. But here's the catch. Data centers drink power and gulp water. And India doesn't exactly have water to spare. With operators like NTT, STT, Adani Connex, Microsoft, and Enextra adding massive pipeline capacity, the real question becomes, how do you cool a digital economy in a warming country? India's pharma story just unlocked a beautifully ironic chapter. Buy China's bulk drugs, turn them into finished formulations, and sell them back to China. A few key takeaways from this chart. The US is India's Pharma super customer, buying over $10.5 billion worth of medicines, more than the next 10 countries combined. China, despite being the world's API factory, ranks only 16th as an export market for India. But here's the twist. China sends India nearly $4 billion worth of bulk drugs, and a reverse trade model would help India send back $6 billion worth of finished drugs.